Hi, I'm Jim Juback, and welcome to this week's Trend of the Week video. This week's trend is, how long does FOMO last? Now, if you don't know what FOMO is, it's fear of missing out. And I use it as a shorthand for the fact that this is not a market driven by fundamentals. Right now, it's driven basically by people's expectations about the future, like, oh, big dollars from AI. It's also driven by in 2023, a lot of people missed out on the big rally. People don't want to miss out on the next one. This makes it a very hard market to read because basically rather than reading a Microsoft financial report on its most recent quarterly earnings, you're sitting there going, well, how are people going to react to this? What are expectations of people going forward? What is their emotional state? These are very, very hard things to get a hand on. They're very hard to quantify. And so what you're really left doing is trying to figure out, well, how long, what's the emotional trend and how long does it last? And again, I'm using FOMO, fear of missing out, as a shorthand for that whole set of expectations. My sense of this is that what we've got outside, what we've got lurking out there that is really determining everything is the Federal Reserve. Think of the Federal Reserve as the goose that lays the golden eggs. The golden egg is going to be a rate cut. Now, we're not going to get one, I think, in March, which is the earliest possible. I think if the Fed is going to find that a little too hard. But the market right now is saying, hey, there's a 65% chance of a March rate cut. I think the fact that there's the chance of a rate cut keeps people involved because this expectation is that if the Fed cuts interest rates, they'll cut more than once, and we'll see a big, big rally. So no one really wants to pull out of the market ahead of this and then try to jump back in. It's just too complicated. So I think that will keep people in. By May, the odds of a 25 basis point cut or more for the May 24th meeting go up to about 96%. Again, I think this keeps people on board at least until those first rate cuts involved. So from here, what I'm really looking forward to is as we digest some of the really big gains in January. I'm looking for this market to be flattish. I think we see some consolidation in some of the leadership stocks like Microsoft and Google and Meta. So they may not go anywhere. I don't see a whole lot of new leadership emerging. So those stocks, a small group, will continue to carry the market, which is something, again, that makes me a little nervous. But again, I don't see people's expectations changing significantly and making them want to pull money out of this market ahead of the Fed moving to cut rates. So I think what we're looking at is sideways, and then maybe when we get an actual rate cut or close to a rate cut in March or May, maybe get some more money coming into the market as those expectations are confirmed. And so that's what I see sort of over the next few months. If you like this video, please subscribe to my YouTube channel. That way you get notification when we're doing our next one. We're doing about 3 a week. The videos are free. Subscribing to the YouTube channel is free. And speaking of free, you can also get my free site, which has got 3 portfolios, dividends, 12 to 18-month stocks, and then 5-year or so long-term holds. And that's jubackpicks.com. That's free. You can just go to the site. If you sign up for the alerts, you get notification of when a new post goes up. Straight to your mailbox. You can also subscribe to my paid site. That's jubackam.com. And that has 6 portfolios, those 3 plus 3 more for volatility and even longer term holding period. And that's a subscription site, so you have to pay for that one. I know, real money. It's only $199 a year, and you usually get a discounted offer. So hey, less than 35 cents a day. Okay, but if that's still too rich for your blood, and you like entertainment more than you like financial stuff, we being my wife and myself, recently moved ourselves, kit and caboodle, and business caboodle, to Italy. We've been here since September, and we've recently started a Substack called We Moved to Italy. It's free. The first 3 are up. I'm trying to catch up with all the ones I wrote, didn't actually get around to posting. So there'll be more going up. It's free. Subscribe. I think it's amusing. You can find out about my adventures in trying to figure out what in the hell that is in the Rialto fish market, or getting my wrist slapped when I tried to pick up a peach in the vegetable from a vegetable fruit and vegetable vendor. You don't do that in Italy. Anyway, so I think it's fun. I think if you like Italy, if you either vicariously or actually because you've been here and love it, please subscribe. We'd love to hear from you. Okay, links to all those are down below. Thanks very much for watching. Talk to you next week.